Thanks so much for tuning into the Mutual Fund Show. I'm Neeraj Shah, and today we'll talk about yet another topic in deep dive with Access MF, and that is the topic of fund of funds. Now, viewers would remember that what we've started since the last 4 months, arguably, is once every month we get Raghav Iyengar to try and deep dive into one particular topic. We've discussed the hybrid category in detail over the last 3 months, and today, having finished that conversation over 3 episodes, we're moving on to a new topic, and we're going to talk about fund of funds and the various kinds of fund of funds, the taxation, the advantages, the disadvantages, and the options thereof. A bit later on in the show, we'll also get in Nirav Panchmatia of AUM Advisors to talk about his thoughts on some of these topics and what are the options that stay before an investor. So without much ado, let me first get in Raghav. Raghav, great having you.
Thank
Thanks
you,
so much
Neeraj.
for joining in and hope all is safe.
Thank you, Neeraj. All is well, grace of God, and we really enjoyed the last 4 months. I mean, it's just like sort of time flies. This is going to be our last, at least my last episode for 2021, and what a year this has been. And I
Yeah,
think we're setting the base for something much, much more heavier in 2022 is another very, very anticipated year. So yes, on
you
that
bet.
happy note, let me just wish all your viewers a very, very happy New Year in advance because I hope the next time I see them it'll be 2022 and yeah, so stay safe, stay happy, and may 22 be a much better year as compared to 21.
Yeah, hopefully on the health front, even more
Yes,
so, but more,
yes,
but on the wealth front as well, because that's what we'll talk
definitely,
about. So,
definitely.
so let's try and talk about this, Raghav. Fund of funds. There, a lot of times these option comes out. It's recommended by a number of people as well, more on the international investing front, but even on the domestic side. Can you talk a bit
Absolutely.
about this? What are fund of funds?
So it's fund of funds is a very interesting scheme, which essentially a scheme typically invests in a set of stocks or a set of bonds, right? And that's what we've discussed, or a hybrid fund, which we've been discussing over the last 3 4 months. Invests in a mix of both of these. A fund of fund essentially invests in another scheme or a set of schemes. So where the underlying where the fund itself goes and puts all its money into another fund or into another set of funds. Now you would ask me, why do we need to do this? Now, if you recollect in the earlier days, when the initial gold funds came out, they came out in the form of exchange traded funds. Now, for investing in ETF, you have to have a demat account, you have to have a brokerage relationship. So many people said that we give us a fund which will invest into that fund. And that was actually the start of what we call the FOFs. Now you have various types of FOFs. You have fund of funds investing in domestic equity funds. You have fund of funds investing in debt funds. You have fund of funds investing in international funds. And that's the really big innovation that's happened, especially in the last 24 to 36 months. And people like us and Axis have done a lot of work around that. So it gives you a lot of choice, Neeraj. In some sense, it's a passive fund because the fund manager, as such, is not really buying, or FOF is really not buying or selling the underlying stocks. He's relying on somebody else to do it, or he's just going and buying a passive index fund where anyway the index keeps moving. So it's a beautifully convenient way for people who don't want to who want to just go the traditional route of investing through a mutual fund scheme into a set of instruments which they would normally not be able to or don't want to buy directly. Uh, on terms of the what are the types, I think as I said, you can do. It started off with gold. So in fact, the biggest category of FOFs till very recently used to be gold FOFs. Today you've got what you call ETFs, and you have all types of ETFs, as you know, and that's something that hopefully we talk about in the coming days. Is exchange traded funds. You have exchange traded funds, which are nothing but funds which are investing in a particular index, right? So you have the Nifty ETF, you have the banking ETF, you have the consumption ETF, you have technology ETFs, and these are all the underlying funds. So you have an FOF which goes and buys into those funds. You have an FOF, Neeraj, which actually goes and buys a combination of these things. And then, of course, now the new innovation which has recently come out is debt FOFs. So you can typically, like in Axis Mutual Fund, we've actually created a fund which invests in other debt mutual funds. So essentially, it's like a fill it, shut it, forget it category. The fund manager essentially decides which schemes to put in. Lastly, of course, the really big category now, which is coming up and really, really flying, is the international FOFs. So here we will just go and buy into an international fund, right? And there again, there are various types you can do. So you have funds which invest into the Nasdaq, you have funds which invest into the S&P At Axis, we have a fund which invests into the Schroders Global Alpha Fund, the Schroders Global Innovation Fund, and the Schroders Axis, the Schroders Greater China Fund. These are some of the three things that we have. But there's a whole host of things that you can create, and that's where there's a lot of innovation. Uh, why do people invest in these international funds? I think the biggest thing is that I think there is something we all suffer from, something called basically domestic bias, right? I think home country bias is something that in all investors, because obviously you will put a majority of your money in what you know. But the fact is that even in developed markets, like even in the US, which accounts for almost 50% of the entire market capitalization of the world, US investors invest almost one fourth of their money outside, right? And that's what you hear in the markets daily: FIs investing, buying, selling. Large part of that is also retail customers from other countries buying into India. And an international fund that way allows an Indian investor to go out and invest into international equities or international ideas. So there are lots and lots of advantages that you have uh, by putting money into an FOF. To conclude this, of course, because taxation is a very important element when you're investing, so you must know about this. A fund of fund is treated as a the taxation is treated like a debt mutual fund, except if the underlying in funds are ETFs. Let's say if I go and create a fund of funds which is going to put money only into ETFs, then I think you get taxed as a equity fund, which is if you hold for more than 1 year, 10%, less than 1 year, 15%. But in all other types of fund of funds, you have to pay, like an international fund of fund, a debt fund, of course, you have to, or even a fund of fund investing into other equity schemes, you have to pay tax at debt rates, which is anything more than 3 years is 20% less indexation, anything less than 3 years is short-term capital gains, which is taxed at your marginal tax rate. So that's sorry, quick 5 7 minute snapshot for you, Neeraj, on the whole FOF structure.
Hmm. I think a question that might come to mind for an investor is that would a fund of fund that I invest in turn invest into a mix of equity plus debt plus other kind of funds, or does it do fund of funds normally stick to a category? Let's say a fund of fund will stick to investments in select equity funds, or and does it stick to only one fund, or can there be multiple funds within the fund?
Okay, that's a lovely question because that's again defined in the offer document. So let's say in the Schroders, the fund that we've launched in India, the Axis Global Alpha Fund, very clearly in the offer document we have mentioned that this FOF will go and invest all its money into the Schroders Global Alpha Fund internationally. And obviously the regulator asks for details of that fund. Obviously they look at various things, they look at the parameters, they look at the size, they look at the track record, etc., etc. So it is essentially defined in the offer document itself. If the fund that we have on the debt side, the Axis Debt FOF, is something which we been now managing now for the last more than 2 years. There very clearly we have written that we will invest in instruments of uh, or debt schemes of domestic mutual funds, right? In fact, that scheme is unique because most of the FOFs in the debt space largely invest in their own schemes. Here, to give us enhanced sense of diversification, we have capped the amount of money that we will put internally into Axis, and we put a fairly large percentage of the money into third-party mutual funds. This is to make sure that the investor gets a diversification and, more importantly, a different ability to play. Every fund manager has his own style of investing. We're trying to give him or her the benefit of the style and obviously also the benefit of diversification in terms of number of securities. So yes, you can. So it's very clearly defined in the offer document itself, Neeraj, what it can do,
Okay.
and so you can really construct anything you want, but it's very clearly defined. So one thing as a takeaway from this, very importantly, all fund of funds are not the same. Just because they have the last three the name is FOF doesn't make it the same category. In fact, it's a reasonably complex category, and you need to read and or understand a little more, or maybe get in touch with experts in the market and try to find out what exactly it is. So you have to just essentially go one level lower as compared to what you would do in a normal equity fund. You have to go one level lower in the FOF and really see what this FOF will really do in its portfolio.
Hmm. Now, certainly, it seems, and I'll ask you that question about the international bit in a moment, because it seems that from a international investors' perspective or taking an investment on the international side, this is probably the most lucrative option, the only
Absolutely.
option, so to say. But just before that, I heard you mention that taxation is the debt taxation. So
Yes.
Raghav, my question is, if I want to take an equity fund exposure, then
Yes.
is fund of funds a less preferred route simply because I don't get equity taxation, I get debt taxation?
It's a very valid point. So if you want and you're really fussed about taxation, then you should invest in a fund of funds which is putting all its money into ETFs as the underlying scheme, right?
Okay.
If you invest in a fund of fund which has exchange traded funds as its underlying, then you get the benefit of the equity taxation. But having said that, Neeraj, I think the key thing is here is if you want, I think many people or many investors actually want a sort of a solution where they really don't want to know where their what's happening to their money in terms of they don't want to track it, if I may put it this way. So they have a very, very long-term horizon. But they want diversification, they want style diversification, they want security diversification. So at sometimes they may just decide to put money into a manager, for example, who is putting money into other equity funds, right? And then saying that you manage the whole thing, you figure out how much I should take in an index fund, how much I should buy a normal, regular, open-ended large cap fund or a mid cap fund or a small cap fund. So those are also there are a set of investors who are happy to forego that little bit of additional taxation benefit that you get by putting money into a pure equity fund and coming directly here. Let's not also forget that earlier, of course, if you remember, sometime back, equity funds were completely zero tax. Today, there is a 10% tax, and so and if you're over 3 years, you're at about 20% less indexation. So the longer you hold your money, the lower is obviously the tax rate. So sometimes the difference in tax is not that significant like it used to be in the past.
Put it in point. Raghav, the other obvious question that comes to mind, last couple of questions, is, and I mean, the last question would be, what are the on offers from the Axis side, and what is the kind of exposure that one gets? But just before that, it seems to be obvious that on the international front, if I want an international investment through Axis, through whoever else, you in turn will invest arguably in a fund existing overseas. So in effect, my investments into any AMC's international offering is effectively an investment into an FOF. Would that
Absolutely.
be
Most,
a correct
yes, that's a,
assessment?
yes, absolutely. Yes, mostly.
Okay. And
Because
and then
very few fund managers, Neeraj, have the ability to buy, sell, track, research foreign stocks sitting in India, right? And if you have, it's the same logic of a mutual fund, right? I mean, why are you entrusting an MF with money? Because we are supposed to be the experts. We are supposed to be doing this on a full-time basis. Most investors do not have the time to really look at that on a daily basis. The same logic applies in an FOF internationally also, right? So, if I have capability sitting outside, why should I go and reinvent that capability? I might as well feed into that capability. That's why you have called FOFs, which are feeding into other funds. The whole idea, and this is something which retail investors keep asking me, what is this feeding? So feeding is nothing but when you put money into an FOF, that FOF essentially goes and invests into another fund. That process of investing in another fund is called feeding into. That's it.
you got it. I heard you mention that at Axis you have showed us something and something else and something else. What are the offerings, and particularly on the international side, since you guys have that association with Schroders, what is the kind of offerings that you have more so on the international investing side, rather?
So we did some work. Schroders, as you know, is a very, very large, preeminent global investment management company with over a couple of 100 years of experience, largely in active management, based out of London. They, the AMC, Axis AMC, they are part owners. They have a joint venture with the bank, Axis Bank. So we have access to obviously their really top ranking funds and a lot of new ideas, which frankly we don't see coming into India for the immediate future. So it allows the investor two things. One is to obviously diversify his or her portfolio, because the fact is that when we did this very interesting set of funds where we had a 70% India exposure and a 30% global exposure, and the 30% global exposure we really went and bought, instead of the FOF, we went and bought the top stocks in that particular scheme. and we had a very, very satisfactory experience. So what it did to our investors was it gave you a much, much better risk adjusted return rather than just putting money into a pure India equity fund. So that is obviously number one. It really lowers your risk. Number two, which is reasonably obvious, is that there are mega companies outside. I mean, today the market cap of Apple is almost equal to the market cap of the entire Indian stock market, right? Yes, you can buy Apple now sitting into India, but yes, there is, as you know, stocks are also you have to have some expertise in both buying and selling. So one is you get access to a whole list of companies which are not traded or available to Indian investors by investing in this. Number three, which is very, very critical, is that the world is pivoting into new businesses, right? Artificial intelligence, electric vehicles, robotics, clean cities, green energy. These are again companies which are there in India but are there in a very, very nascent stage. So you will find a lot of these companies in the private equity space, but not really in the public space. And the world is there are, but this is an old theme in the world. In some sense, we are in India now. We are catching up, but these companies are now available abroad and listed, and those offerings also are available to Indian investors. Lastly, of course, you have country-specific funds also. You can buy into a US large cap fund or a China large cap fund or a Europe large cap fund. So that's the other side of the business. Suppose you want to go and buy a US large cap fund. Yes, I think that's available today through an FOF structure too. So these are essentially the three, four big, to me, the big three reasons are mainly diversification, because a lot of these things that we buy are available internationally are not going to be in India or not available in the size that we would like to have it, or to a retail investor may not be available. Number two, it's extremely convenient. Today, yes, you can go buy these stocks on your own. I mean, the Reserve Bank of India does offer you the LRS facility. You can go technically and go to a broker and pick up the stocks, but there is a little bit of pain involvement. I mean, the process of investing has become simple, but having said that, the other things are not yet easy in the sense that which stock do you buy, which stock do you sell, how do you research all these stocks and things like that. Thirdly, of course, I think very importantly, I think the whole risk adjusted story is really, really important from an India perspective. Today, a lot of our needs, Neeraj, are directed to abroad, right? We have a fair, if you ask most of Indian parents today, especially and across not only urban, I'm saying urban, semi-rural, one thought in their mind is either an international holiday or an international education or anything, something to do internationally, right? So I think this investing abroad gives you that benefit because in some sense, it's not exactly perfectly dollar hedged, but it allows you to take benefit of some amount of the depreciation of the Indian currency also. So I think if you ask me, lots of good reasons to put money. A very, very beautiful way to do it. Fund of fund is super simple. I mean, it's an absolute retail fund. You can come in with as low as 5,000 rupees here. You can set up an SIP. You can do everything that you do in a normal, regular Indian mutual fund can be done with an FOF. One thing that you must again keep in mind is that because we are investing in another fund, and the international payout cycles are a little different from what we follow in India. I must, we must compliment our regulator. A lot of the monies that are received abroad are not. I think our payment cycles are far, far superior actually. So in that sense, we may be technically a developing market, but a lot of our processes are actually way ahead of some of the international markets. So your outflow when it comes is not normally a T plus three, Neeraj. That is T plus three means you give the redemption today. Normally, in an Indian equity fund, you will get your money back within 3 working days. Whereas in a foreign fund, it could be anywhere from maybe 3 to 7 days,
Mm.
depending on the scheme that you're in. So, and again, which country you're investing in. So, that again, please keep that in mind when you're investing in a fund, and more importantly, when you're redeeming. Because I have seen many people assume that since India pays in T plus three, FOF will also pay in T plus three. That is not the case normally because there is an additional leg of getting money from that international fund into India and then obviously we passing it on to the investor. So that's the second caveat that I would like to just keep with you. Apart from the first one, which I told you, is that FOF is a common word, but it covers a uh, massive range of investment
Sure.
opportunities available.
Sure. Raghav, thanks for that. Thanks for these
Thank
updates
you,
and lovely understanding this whole concept from you. Thanks for the
thank you,
time today.
thank you, Neil. Thank you. Great, and I can have a great happy new year, all the viewers. Thank,
Thank you so much, Raghav.
thank
Well,
you. Thank you.
viewers, so that's the view on fund of funds. You got a lowdown from Axis, and of course they have a bunch of offerings out there as well. But as would be the case on every mutual fund show, we'll get you a perspective from somebody who's not a part of the ecosystem, but looking at it from an outside and trying to advise his clients or her clients. And today's guest is Nirav Panchmatia of Advisors. He's been on the show before. Needs no introduction, really. Nirav, good having you. Thanks for joining in. Um,
Thank you so
uh,
much.
I don't know if you got a chance to hear most of the things that Raghav Iyengar of Axis was talking about,
Yeah,
but is there something that you would want to add to uh, why an investor should or should not choose the fund of fund options, both on the domestic or the international side?
sure. And first of all, Nirav, thank you for having me. I mean,
Pleasure is
it's
ours.
always a pleasure to come on the mutual fund show. I think it is a very well designed show that I think every investor should have a. I mean, even today I get to learn a lot from your past shows. So thank you for having me. Yeah, I heard Raghav. I think one of the biggest advantage of a international fund of fund, not necessarily a domestic fund of fund, is that you can avoid a home country bias. So Neeraj, I think Indian domestic Indian investors, we are overexposed when we see our net worth. If we have equity investment, whether through mutual funds or through share market, and then we have real estate, all these are INR assets. So even among our friends and families, if you do a survey, very few would be having, barring ultra HNIs, you leave them aside, but very few would be having any international currency exposure. Nowadays, when we most of our children are wanting to study abroad, or some people are wanting to settle abroad, and there is no Indian who would not want to vacation abroad. In that case, having some form of a dollar asset is very important. So I think fund of fund gives you a takes you away from a home country bias and takes you away from a single country exposure risk. Second thing, Neeraj, there is this very important statistic that I'd like to share, that the MSCI World Index Fund has statistically been proven to have a very low correlation to the Indian equity market. So they say that over a 3, 5, 7, and 10 and 20-year period, the correlation between MSCI World Index Fund and Nifty Total Return Index is only zero point 0.4. So that means both these markets, the international market and Indian domestic market, very rarely, except for events, black swan events like COVID and all, very rarely they go down together or they go up together. That I think is a very important reason why one should have an international fund of fund. And another is currency exposure. So over a 5, 10, 15 and 20-year period, again, it is believed that rupee has depreciated at a CAGR of 2.3% over a 20-year period against the dollar. Now, if I'm an Indian having any business interests abroad, or if my children are young and they are planning to move, do education abroad, this currency depreciation itself will hit me a lot. That doesn't apply if they're planning to do an education in India. That also asks me to have some international exposure via the international fund of fund, and it is, I think, one of the cheapest way to have an exposure to a US dollar denominated asset. Some fund of funds, like a US equity fund or a European equity fund, the day you buy that particular fund, your INR gets converted into USD at the current US prevailing rate. And when you sell it 3, 5, 10 years down the line, your dollar INR will get converted on the prevailing rate on that date. So you're basically locking a US dollar asset. That, I believe, are three main reasons why you should have international fund of fund. And Neeraj, one last major reason would be that there are certain themes he's still not available in India, in mature markets like India. We are mature, but we are not as mature as markets like US. So there are these FANG stocks, Facebook, Apple, Alphabet, Google, Netflix, and all. I think it will be another 10, 15 years before you have product companies like these in India. How do you get exposure to these stocks? Second, there are these R&D pharma companies like Abbott, like Moderna, like Pfizer. You don't have exposure to them here in India. Third, there are these AI ML companies, machine learning and artificial intelligence companies that even Raghav pointed out to. We will not be having these companies at least for another decade in India. So this is the last major reason why you should have a exposure to international fund of fund.
Hmm. So, Nirav, suffice to say that from your perspective, a fund of fund exposure should largely largely be taken if you want an exposure on the international side as a tool of diversification of your portfolio. Am I correct?
So I mean, more or less correct, because I mean it is the cheapest, most economical and safest way to have exposure to international equity. I mean, having said that, there are certain funds which are domestic fund of funds which equally have a merit of putting money there, although they don't give you, they don't take you away from a home country bias, or they don't give you a foreign exchange hedge. But these funds are wonderful products. Like there is a fund from ICICI Prudential which from time to time, based on the expertise of the fund manager, selects which sector exposure they should be taking the most and which they should reduce. So a retail investor is not in a position to decide which sector, whether to go for pharma or to exit pharma, whether to go for financials, so on and so forth. So from that angle, even that domestic fund of fund merits, but predominantly a fund of fund is doing a phenomenal, this category is doing a phenomenal job as far as international fund of funds are concerned.
Got it. Okay. Nirav, just one question, because I read somewhere in the notes that you sent that there are very few fund of fund options on the domestic side, maybe, which have equity taxation. Most of the funds, I think, have that debt taxation. So can you talk a little bit about that?
Yeah. In fact, to my knowledge, Nirav, there is only one fund out there, one of the iProof funds, a passive strategy fund, which is having an equity taxation. By definition, a fund of fund, whether domestic or international, enjoys a debt taxation. That is by definition. But if a fund of fund has more than 90% exposure to domestic ETFs, which are equity ETFs, then that particular fund can enjoy an equity taxation. Right now, to the best of my knowledge, there is only one fund which is enjoying this particular equity taxation, but there are more funds which are in the pipeline.
Got it. Any which is, I think, as Nirav would tell you, taxation should not be the principal reason for choosing. In which case, Nirav, we had Axis, of course, talk about some of their offerings, but assuming that for a larger case, assuming that you choose a fund of fund option because you want to diversify on the international side, and almost, in fact, a lot of fund houses, if not all, now have these offerings. Have you been able to analyze some of the main ones, and would you be able to tell us which of the fund of fund offerings are best suited, are best for a diversification perspective, according to you, of course?
Sure, Nirav. Thank you. So I believe, so everybody in India somewhere, if he is an equity investor, and even if he is not an equity investor, we dream about companies like Apple, Google, Amazon, Facebook, and all. And although now international demat accounts are getting opened in India, but they have their own issues. So I think one of the first fund that an Indian retail investor should invest via the FOF route is a NASDAQ fund. So there are many companies like Kotak and Motilal Oswal of the world, which have a NASDAQ 100 or an S&P 500 fund. I think NASDAQ is one such index internationally, which is very innovative, completely tech-based, and it has many companies, the likes of which are not available in countries like India. So one of the first recommendation I would give is a Kotak NASDAQ 100 fund of fund, or a Motilal Oswal NASDAQ 100 fund of fund. Now, if you want to go one step ahead, and if you say, I don't want to have the entire index, the NASDAQ index, but I want to have only the FANG stocks. So there's a beautiful offering from the fund house of Mirae, known as Mirae Asset NYSE FANG Plus Index. Now, the beauty about this, Niraj, is that this particular fund only invests in 10 FANG stocks, so which includes Alphabet, your Amazon, Apple, and there are two Chinese companies, Alibaba. It also invests in Netflix and Nvidia, the chip company. And we know there is a huge shortage of chip nowadays abroad and internationally. So Nvidia stock is doing phenomenally well. This particular fund is one of my favorite. Another fund that I would recommend is ICICI Pru Global Advantage Fund. I'd like to mention a few seconds on this particular product. Niraj, it's a wonderful product. It is a fund of fund in its true sense. It invests in 5 different geographies, ETFs, funds worldwide. So it invests in a US-based fund, it invests in a Europe-based fund, it invests in a Brazil-based fund, and it invests in one more geography, in a Japan-based fund, an ex-Japan fund. And from time to time, it keeps on rotating this product and reduces or increases the weightage based on the valuation parameters. So that's a unique product. When we want to invest in a fund of fund, the first question that flummoxes an investor is whether I should go for US or for Brazil. There's a problem of plenty even in fund of funds. That problem has been taken care of by this particular fund. So that would be another fund that I'll recommend. Another would be a Edelweiss US Tech Fund of Fund. It invests in US based companies which are tech savvy. Again, this particular theme is yet to arrive in India. We are seeing some platform companies being listed, but the universe is too small. So these would be some of my recommendations, Neeraj.
Fair call. Nirav, this was insightful in more ways than one, and thank you so much for your time as well as your insights today.
Sure.
And from all of us, much appreciate your time.
Pleasure. Thank you for having me, Neeraj. A pleasure talking to you.
Likewise. And viewers, thanks for tuning in to this edition of the Mutual Fund Show.